Netflix, the undisputed titan of the streaming world, has recently experienced a commendable surge in its stock value, soaring by an impressive 7% following its latest earnings report. This has further solidified its supremacy in the streaming wars, firmly establishing itself as the leading platform in the industry. As of now, Netflix boasts a staggering market capitalization of $215 billion, coupled with a forward price-to-earnings (PE) ratio of 32.5 times. Looking ahead to fiscal year 2025, analysts anticipate an estimated earnings per share (EPS) of $19.51, translating to a forward PE ratio of approximately 27 to 28 times. This financial prowess is a testament to Netflix's consistent growth, maintaining an impressive trajectory of over 20% year-over-year. The company's financial health is underscored by its robust Q4 2023 performance, where it reported revenue of $8.83 billion, reflecting a substantial 12.5% year-over-year increase. Global streaming paid memberships also witnessed a commendable surge, surpassing 260 million and marking a notable 12.8% year-over-year growth. While the Q4 net income fell just shy of $1 billion, standing at $2.11 per diluted earnings per share, the global streaming paid net additions in the same quarter amounted to an impressive 13.12 million. The Q4 operating income reached $1.49 billion, boasting an operating margin of 16.9%. Cash flow for the quarter reached $1.58 billion, with net cash provided by operating activities totaling $1.66 billion. Notably, Netflix exhibited confidence in its own shares by repurchasing 5.5 million shares for a hefty $2.5 billion during Q4. Looking forward, the company projects a robust Q1 2024, forecasting a revenue growth of 13.2% year-over-year, set to reach $9.24 billion. The net income for Q1 2024 is anticipated to hit $1.97 billion, with a lucrative diluted earnings per share of $44.49. Moreover, Netflix is eyeing a full-year 2024 free cash flow of around $6 billion, underscoring its financial stability. In a strategic move to expand its content portfolio, Netflix secured exclusive rights for WWE Raw in the United States, Canada, the UK, and Latin America. This landmark deal, valued at an impressive $5 billion over 10 years, marks Netflix's foray into exclusive live sports content, adding a new dimension to its streaming offerings. Netflix's ambitions don't stop at conventional streaming. The company is aggressively venturing into the world of gaming, a move that has seen notable success. Despite being in the early stages, engagement in the gaming segment tripled last year, with the launch of the GTA trilogy emerging as their most successful game launch in terms of installs and engagement. This diversification aligns with Netflix's overarching goal of ensuring user satisfaction and retention, emphasizing that when users start a show or movie, they will love it. In line with this strategy, Netflix aims to enhance member value further by improving its core series and films. The company is not content with resting on its laurels. It seeks to expand into live programming, signaling a shift towards a more dynamic and interactive content experience. The recent exclusive deal with WWE Raw is a clear indication of this strategy in action, tapping into the massive fanbase of professional wrestling. Moreover, Netflix is poised to tap into new revenue streams by scaling its advertising business. In Q4 2023, the company witnessed a staggering nearly 70% quarter-over-quarter increase in its ads business, constituting 40% of all Netflix signups in the ads market. This suggests a growing appetite for ad-supported streaming and presents a lucrative avenue for Netflix to explore. In a bold move, Netflix plans to retire the basic plan in some ad-supported countries, starting with Canada and the UK in Q2. This decision aligns with the company's strategy to capitalize on the increasing demand for premium content and generate higher revenue from its user base. It signifies a shift towards a more premium-oriented model, targeting audiences willing to pay for an ad-free, elevated streaming experience. As Netflix navigates these strategic waters, it remains mindful of the importance of content quality. The emphasis on ensuring that users love what they watch is a core tenet of the company's approach. This commitment leads to higher satisfaction, longer retention, and positive recommendations, all critical elements in the fiercely competitive streaming landscape. The Nielsen rankings for 2023 in the US further underscore Netflix's dominance. The streaming giant is not just a player, it's a powerhouse, dominating in original TV series, original films, and acquired series. This speaks volumes about the brand's ability to consistently deliver content that resonates with audiences, making Netflix a go-to destination for a diverse range of entertainment. However, amidst these remarkable achievements and strategic maneuvers, concerns and considerations emerge. The forward PE ratio of 32.5 times, while reflective of strong investor confidence, raises questions about the sustainability of such valuations. As Netflix continues to invest heavily in content, gaming, and advertising, there's a need to closely monitor how these ventures contribute to the bottom line. Content spending, expected to reach up to $17 billion in 2024, signifies a significant financial commitment. While quality content is undoubtedly the lifeblood of any streaming service, the challenge lies in balancing content investment with the need for profitability. Investors will be keenly observing the return on investment from these substantial content expenditures. The exclusive deal with WWE Raw, valued at $5 billion over 10 years, brings both excitement and caution. While it opens up a new frontier for Netflix in the live sports domain, the long-term viability of such deals warrants scrutiny. The dynamics of the streaming landscape can shift rapidly, and long-term commitments must align with evolving consumer preferences and market trends. The foray into gaming, though showing promise, is still in its infancy. While the success of the GTA trilogy launch is encouraging, the gaming industry is highly competitive and dynamic. Netflix will need to navigate this landscape with agility, ensuring that its gaming offerings resonate with a broad audience. The scaling of the advertising business presents both opportunities and challenges. The substantial quarter-over-quarter growth in Q4 2023 suggests a strong appetite for ad-supported streaming. However, the decision to retire the basic plan in some countries may face resistance from users accustomed to a more affordable, ad-supported model. Striking the right balance between ad revenue and user satisfaction will be crucial. In conclusion, Netflix's recent financial performance, strategic moves, and ambitious plans paint a picture of a company at the forefront of the streaming revolution. However, with great success comes the need for careful navigation. Investors and industry observers will be closely monitoring how Netflix manages its valuations, sustains its growth trajectory, and navigates the evolving landscape of streaming, gaming, and advertising. The journey ahead promises excitement, challenges, and the ongoing evolution of one of the most influential players in the entertainment industry. Please go ahead liking, subscribing, and sharing with friends to support our content. The information is for general purposes. Viewers should conduct research and consult professionals for financial decisions.